You ready?
We're back on.
Okay. All right, just to recap, we're gonna fix on Article 20, we're gonna fix that other reference, change it from 6 months to 3 months. So all employees are eligible to accrue and use annual leave after 3 months of employment. Holiday pay, you guys are gonna take a look at. Discipline and discharge, we have some proposed language. Chris, do you wanna read that, or you want me to do that?
Sure, I'll read it.
Okay.
Just, let's step back real quick. So 20.1 will revise, and then 20.5 has we're gonna do the forfeiture language.
Oh, yeah.
Is that right?
Yes, I got my pages separated.
Yeah, so
Yes.
20.1, changing that to 3 months. And then in section 20.5 is the forfeiture language you read earlier today? Okay.
Mm-hmm.
And the language of the MOU.
It's just
Right,
incorporating the existing.
That's right, yeah.
Did y'all skip over 11? Or,
No, wait, 11's.
okay, so hold on, table, gotcha.
Yeah. And then 22, Karen just said that. I think we all agreed on 22.
Well, they wanna take a look at it.
Oh, I'm sorry,
for
that's
the-
right, that's the
the-
one.
It's gonna be part of their bigger caucus.
Yeah.
The either comp time or holiday pay is the proposal for 22.
Careful when you say holiday pay. Holiday pay in our world is double time and a half. So straight time or comp.
Pay for the holiday at the straight time rate.
Yes.
So I'm thinking of in terms of the payroll code, we have this holiday pay payroll code that is straight time, and that's how it would be compensated but it also does say that the city may elect to provide comp time instead of the,
Essentially, it's
it
creating,
says holiday pay in this, is that gonna be an issue for you guys? I don't want there to be any confusion. When we're talking about holiday in 22.4 in the proposal, we're talking about straight time holiday pay. We're not
Which is the
talking
city
about
code.
overtime.
The
Yes.
city code, maybe you should add that in there to
Well, it's-
clarify.
Well,
No,
no, it says it in the previous sentence.
yeah,
where
it's
for
fine,
the
shall be paid for
at
the holiday at the straight time.
rate.
Yeah, I'm good.
Yeah, so
I'm
we're
just,
all clear.
that was
what
more for clarification for the people watching. Because when you
Understood.
say
So-
holiday pay to a police officer, we think we're getting double
You're
time
getting
and a
double time and a half.
So I just
get
wanted to
it.
clarify that it's
Okay, yeah.
straight time,
So
10
maybe-
hours.
Maybe at the end of that sentence, you could say, in lieu of holiday pay at the straight time rate.
Yeah, why don't we do that?
Yeah.
The city may elect to
wording
provide
just-
compensatory time at the straight time rate in lieu of
And I would think,
holiday.
I would scratch the word pay in lieu of holiday at the straight time rate. In lieu of the holiday at the straight time rate.
You leave it pay. I don't think it's.
I think we all understand, I just wanna make sure we're
What the intent is.
really clear with the.
But that does help to add that at the end there.
At the straight time rate.
Correct.
For
There's-
26, oh, sorry, go ahead.
No, I was gonna say, there's 3 different ways that officers get paid on the holiday, and it all depends on whether they're working or not, when it's the scheduled day on or off. So
Yeah.
if we could just make sure that we clarify, and we know, that it's the day off, straight time
Right.
part of it, so.
Yeah. And it's better to have it in the writing clear like that, that's good.
Agreed.
Article 26. Karen, do you wanna go over, you wanna review that again, any more on holiday, any more language?
No, I think I'm good, I think we're good.
Okay. So 26.1 and 26.3, I'll start with 26.3, we'll work our way back up. So 26.3 will remove "and the collective bargaining agreement," and we'll just add the word "and" between policies and procedures, and then there'll be a period. All disciplines shall be determined by the chief of police in accordance with departmental guidelines, policies, and procedures. 26.1, we'll revise that. That'll be, we propose that'll be officers are subject to discipline up to and including discharge for just cause, period. Any violation of a police department general order, personal policies of the city, or any law may be subject to disciplinary action.
You see, go ahead, in any law,
Yeah, you had mentioned that.
should you just say maybe Florida statutes or something?
We could clarify by saying Florida or federal law.
Let me just think for a second.
Sure.
Okay, well, you realize that, and I know you do, that any criminal thing that these officers are charged with, that has to be disposed of before there can be a disciplinary
yeah.
process. And if it's disposed of course, then they can't take action against something that didn't occur, but, as long as it's kept in that perspective, I
Absolutely.
suppose.
I mean, they would have had to have been adjudicated as having violated the law. I mean, any one of us can get charged right now, tomorrow.
Sure, and it
this morning,
happens.
Yeah,
Mhm.
and we haven't done a darn thing. I was just gonna propose, just leave it as a law, because the officer has to be adjudicated as being guilty of violating the law. You have to have been found to have been in violation. And
Well,
then
that's-
I agree with you that the word, between the use of the words will and may, absolutely, that would change the may.
I appreciate that.
Okay. So those are the only suggested changes to 26.
Okay.
Before we get to the economics, we did just leave off with Article 30, entire agreement. I mean, do we wanna talk about that now or no?
Well, it's all based upon what's
I
coming up.
think that has a lot to do with the finance.
Yeah,
so.
okay. Okay. So AJ is the finance guru.
No, dubious title.
Yeah.
Thank you.
All right. So as part of kind of this new effort on the city's part, we wanted to take a moment to explain to y'all why it is that we're taking the approach we are. So I wanted to prepare a financial outlook really to discuss with y'all, and I'll avoid trying to be professorial here, and I'll just, to speak as frankly as I can. So the way this presentation gets broken down is it outlines what we're seeing at the national level, what we're seeing at the state level, and then what we are seeing here at the Jacks Beach level. And then subsequent slides will provide you with data that's specific to Jacks Beach and our finances for 2021. So that second slide that starts with national unemployment trends, that's from the Labor Department. They come out with their labor statistics. I would say they do it monthly, but sometimes they'll come out with publications every 2 weeks, depending on what's going on. And so the stat you're looking at here is the initial claims for unemployment insurance. That's people who are filing a first-time claim for unemployment insurance. And you see, prior to when COVID hit, January through March, those claims were relatively low, the economy was humming along, and then you see this massive increase that occurs somewhat towards the end of March and the beginning of April, where we go from having, roughly 100,000, maybe 200,000 people filing for initial unemployment to close to 7 million filing for first-time unemployment. That trend begins to go downward in May, June, July, and August. But what we continue to see is that the national pandemic is beginning to reveal a recessionary impact on the economy. We are seeing consistently that there are in excess of 1 million people filing first-time unemployment claims every week. And a trend like that tends to be alarming for those of us spreadsheet nerds and accountants that look at that and we're like, okay, what does this mean for the long term? And so if you look to the next slide, which is slide 3, and please feel free to stop me if you have any questions at any time. I'm happy to answer them. This slide outlines people who are continuing to receive unemployment assistance. And similar to the last slide, you see it was relatively low January through March. And then there's this dramatic increase that occurs in April and May before we start to see kind of a reduction, even if you want to call it. But I think what it shows is rather alarming in that we have in excess of 15 million people in the country that are continuing to receive unemployment, and that trend shows no signs of slowing down right now. And I go from here to the 4th slide and kind of explaining why that doesn't.
Sorry, quick question on the slide. how many of these numbers for the continuing claims are inflated due to the CARES Act extending people's time to still claim unemployment benefits?
That is actually under a different pandemic unemployment assistance program, which is monitored separately by the Labor Department. This is just people continuing to receive unemployment. These separate programs that were rolled out as part of CARES, which was Pandemic Unemployment Assistance Program, and I can't remember the name of the other one, but they are actually reported as separate metrics, and in actuality, it brings the total of people receiving unemployment nationally to closer to 30 million.
Okay,
instead
so
of
this is
15.
just, this does not take into account any sort of the extension of unemployment benefits afforded to people
This
at the
is
national
regular
level.
unemployment.
Okay.
This is regular unemployment. And so, pretty much what it means is as you continue to see a trend of 1 million new people signing up for unemployment assistance each week, and as we continue to see high numbers of people continuing to receive unemployment benefits, you get most economists that are starting to have pessimistic short and long-term outlooks on what it means for us nationally, especially because the CARES program, which afforded that additional $600 in unemployment benefit for people, expired in July. And so there's no sign right now of that program being renewed. And so with the expiration of that in July, and we're through the month of August now, we're anticipating seeing the people who had that buying power sustained as a result of that additional unemployment benefit, their disposable income is going to go down as a result of that. And as you all are aware, America is a consumer-driven economy. This country makes its money by people going out and spending money, buying stuff, going to restaurants, going to bars, staying at hotels. And so what we can anticipate seeing as a result of that benefit going away is a reduction, quite frankly. It's a reduction in economic activity. And that's really what concerns me at this point, is that eventually you have all these people who are continuing to receive unemployment matched with the dilution, if you will, of that unemployment benefit because that additional national supplement has gone away. Reduced consumer spending equals reduced sales tax revenues for state and local government, especially in Florida, which is largely driven by the tourism economy. And Jack's Beach, we have a lot of hotels, a lot of restaurants and bars here. There's no reason to think that we would be not impacted by what's going to end up happening. So that's my take at the national level. Any questions so far? Okay. If we flip to the next slide, what we're seeing at the state level, I mentioned this in our first meeting. The state fiscal year ended June 30, 2020. And so their estimated revenue losses to the general fund were $1.9 billion, which was a reduction of close to 6% from their forecast completed in January. And of that $1.9 billion, call it 85% came from sales taxes. Tourism is a major draw for our state. It helps provide jobs in the service sector. And a drop in tourism or a continued lag in tourism is already negatively impacting service sector employment such as hospitality, restaurants, retail shops. You are also starting to see some major employers nationally already announcing layoffs as a result of what we're seeing. American Airlines announced that they're laying off 19,000 people. MGM Resorts is laying off 18,000 people. I understand that those two examples might not relate directly to the state of Florida, but it's bits of evidence that we're seeing that lead us to believe that we are at least in for short-term to some kind of long-term pain over the next couple of years.
Well, you're just picking out sectors that were most affected by COVID.
Right, which in the state of Florida happens to be the largest sector, which is your tourism industry. When Mickey Mouse shuts down in Orlando,
Mickey Mouse is back open.
Mickey Mouse is back open with a lot of restrictions, and not every single resort is open. And so, what other major tourism draw is there in Florida, aside from our beaches, aside from what's in Orlando or maybe South Florida? And so there's reason to suggest that maybe we need to temper our expectations with regards to the the forecasts which we had earlier in the year, which are essentially useless at this point.
Have any Jacksonville Beach hotels closed?
Not to my knowledge, no Jacksonville Beach hotels have closed, but their occupancy is down.
It's way down and they're asking for relief on
Yeah.
everything.
They've
from,
asked for relief on
power
utility
bills
bills,
and-
yeah.
Yeah.
The Jaguars terminated 25% of their staff this week.
Yeah.
I wouldn't talk NFL to
Yeah, it's
Woodstock.
not a business.
Yeah, yeah.
However, they could terminate 100%, and I don't think,
So-
you know,
so
many
to
police
maybe-
officers would mind.
So to answer, we are seeing some hotels in the county that are laying off workers. Okay, we had that hotel in downtown Jacksonville that did an initial round of furloughs and layoffs of 250 people, and then they filed a second notice with the state, which is that worker adjustment and retraining, the WARN notice they call it, where they're doing a second round of layoffs over there, and these are permanent. And so I think what you're seeing is a lot of these companies that they are faced with the same level of uncertainty that we are too. And so you're seeing a lot of them take these preemptive actions to kind of stem what they foresee as the bleeding that might occur. And so we're starting to see that happen at a local level in the county here that, you know, we have to take into account. And so if you flip to the next slide, well actually the last point on that slide, what we're seeing at the state level. The state's fiscal year began on 7/1. And I have sympathy for them on this because I can tell you this, the budget process is not something that happens over the course of a month or even 2 months. Here locally, we start our budget process in February and run that thing all the way through September when council formally approves the budget. There's a lot of assumptions that get made early on in that process, and we're talking about starting a budget process in February for a budget that we don't even start until October. And so in that 8-month window, a lot happens, a lot changes. You know, there are things that I bring to for decisioning by Mike and Karen in March that we don't end up including in a budget in June or July because things have changed dramatically. That's what's happening at the state level. They put together their budget estimates starting in like November for a budget that they're starting on July 1. And so back in November, December, and even January, things were looking really good for the economy. There was no reason to expect that there would be kind of this break on the economy, if you will. And so now, the state of Florida is in the unenviable position of starting its fiscal year while we're still going through a pandemic, utilizing revenue forecasts that were done pre-pandemic. And so their folks over there are kind of faced with the task now of having to revisit a lot of the revenue assumptions they used to build their current year budget. It's not uncommon to revisit revenue assumptions during the year. It is uncommon to have to revisit them so early in the fiscal year. You know, you do a revenue estimate, you might expect, okay, it's not gonna come in dollar for dollar, and we'll adjust it as we go further on in the year. What doesn't happen is, you don't come the first month of the fiscal year and say, oh no, my revenue estimates are way off, and I don't know that I can make it these next 11 months without having to revisit these estimates now. That's what's going on at the state.
How much of the city's general fund income comes from the shared from the state?
So,
We have the chart in here.
16%.
According to the city, it's 16%. With ad valorem taxes making up well over half of it.
and ad valorem taxes, I just want to point out when we get to that slide, ad valorem taxes used to make up a smaller share of the pie because we used to get more in state shared revenues. And so as we had to reduce the expectation of what we were going to get in state shared revenues, the ad valorem slice grew a little bit. But before that amount,
It's also property values have increased almost double digits every year.
property values actually in Jack's Beach are expected to increase from 2020 to 2021 by about 6%, which is what we've been seeing the last few years. But there's no reason to believe that we won't experience something similar to what we did in the Great Recession. The Great Recession began in 2006, and in 2006 through 2008, property tax values continued to rise, and it's because of the fact that they are looking at values in a bit of a lag there. We didn't begin to see property values decline here in Jack Beach until 2009, and they continue to decline through 2014.
2012 was the bottom.
2012 was the bottom according to what?
Your chart.
It said it was the bottom of the values, but we continue to see values.
Not rebounded until,
No, it's the lows, according to the City of Jacksonville Beach 2021 budget presentation that was posted online, says
Mhm.
2.47 billion in 2012, and now
Mhm.
it's 4.05 billion
Right.
in 8 years. That's up 65%. And I consider property value, a leading indicator of property values would be permits and things applied for, which are at an all-time high.
Permits is actually something that we're projecting is gonna go down next year as a result. As our city continues to be largely built out, and a lot of the development you end up seeing are people who are buying and demolishing.
Which gives the city the opportunity to reassess the property. It's
But there's-
perfect.
well-
You're not capped by the 3% per year once it changes owner and they flip it.
But that kind of development only occurs when people actually have the money to do it. And when you have large numbers of unemployment, I don't think it's reasonable to expect that there's gonna be that continued level of development going on. A lot of people are gonna be throttling back plans that they had for major capital investment like that.
So correct me if I'm wrong, the Pier Cantina was sold to a developer with plans to put up for about a 170 unit hotel 1 year ago for $6 million. It was sold last week for $8 million to a South Florida developer. I don't think that a developer would spend 33% premium in a year to purchase a piece of property to put up a hotel if the long-term projections of the city were as dire as you're trying to paint it.
I think it's conjecture on your part to make that assumption. We can't sit here and make the determination for a private developer what it is that they perceive. It's what
Well, I'm
I-
not, you're trying to paint doom and gloom, and I'm trying to counter that with some realistic numbers.
Well, actually,
I mean,
I
the city
think-
has seen an almost doubling in the property values in an 8-year
Yeah,
period.
it was a 10-year period that took us to recover our property values back to pre-recessionary levels. That's what was in Mike's proposal that he gave to the council at the showcase.
Okay.
It's a 10-year window. And I'm not really predicting doom and gloom, I'm just outlining the facts as I see them. And I'm telling you
Just
that.
presenting facts to the contrary.
And I'm telling you that in the 2021 fiscal year budget, this is what we have planned for. And so, as a result, even in the current year, at the local level, we've seen reduction in rental city facilities, our convention development revenues are down. That's directly correlated to what they call, or what the popular term is heads in beds. As these safer at home orders came into effect, nobody saw that coming. Nobody did. Less heads in beds equals less convention development, less sales tax revenue for us here. And that's what we're looking at. You know, we can sit here and debate all the time because, you know, there's pundits on every channel that'll come out and tell you they believe we're gonna do a V shape or a U shape or a W shape recovery. Nobody really knows. There's a lot of uncertainty. I think that's something we can all agree on.
I agree.
And so, looking at that, and just kind of explaining the logic behind our financial position here. You know, the next subsequent slides kind of outline the general fund and it'll give you a snapshot of it.
So I just, if you don't mind, I'd like to come back to this.
Which slide?
The last one, right before general fund.
What we're seeing at the local level?
Yeah, what is your basis for saying that you foresee property values declining?
So, our city, we're fortunate in that our tax base is relatively affluent. You can also look at the number of homes or the number of people who might use this as maybe a secondary home here in the city. And so, there's a few things that one can look at to kind of make that determination. It's my opinion on what's gonna happen here locally. The ridiculously high number of people claiming unemployment and continue to claim unemployment is an alarming indicator for me. As people have less money, they're gonna spend money on less, and they might shed assets that they don't necessarily need to have. And doing so does have the ability to depress property value. Less people working means less people that can pay bills.
Do you have any statistics on the absorption rate, average sales price, time on market, anything to support?
I wouldn't use that, because that's what's going on right now, and that's not indicative of what's going on in the broader economy. There's still real estate deals going on right now,
Mhm.
but those are deals that were started 3 months ago. I don't think that we're gonna have a good idea of what's going on until we're in it. And there's no reason to believe that it's gonna reveal itself in 2021, because property taxes are or property values, I should say, are a lagging indicator.
Agreed.
It takes a while to see that.
I agree.
But
Just like
can't-
I said, permits are 1, 2, 3-year indicator of future property values.
That's
because
not
obvi-
necessarily correct, because they can always file for extensions.
What do you mean?
They can file for extensions on any kind of planned development that they
No, I
might-
understand that, but typically, let's say a residential permit, they're gonna be done, closed, and reassessed within 2 to 3 years. And I understand, yes, there
Maybe.
are obviously projects that can extend and go well beyond their plan. However, using one economic indicator of unemployment to base the entire outlook for the city's finance isn't really taking a holistic look.
It's not what we're using to base the entire, it's a piece of it. There's a lot that you have to take into account with it.
And I'm asking for what else have you taken into account? I've
property
offered several
values?
other numbers that are pointing to positives, and you really harped on the one negative of the unemployment.
Well, so what we have here then is what other indicators are you pointing at to consider that property values would continue to increase the 5 or 6% they have been going the last couple of years? What other indicators would you point to?
You called yourself the numbers guru, I'm asking you. I'm just a
No,
dumb cop.
You just stated that you're pointing to other things. What other things are you pointing at?
Well, you say we're in a recession. A recession is defined as 2 consecutive quarters of negative GDP growth, correct?
Yep.
What was the first quarter of 2020? It's a 5% loss. Second quarter, yes, we did see the biggest historical loss we ever saw, a little over 31%.
Right.
However, the United States Bureau of Economic Statistics is projecting a 15% increase in the third quarter and a 5% overall for the year 2020, indicating the recession is over. That's from the United States.
That's their projection.
Okay.
That's their projection.
The Dow Jones Industrial
There are
Average.
economists that would disagree with that.
The Dow Jones Industrial Average was at almost 300,000 on February 20th. We hit a low of 18,591 to 323. Yesterday's closing, almost back to our record high, 28,645. NASDAQ.
The Dow Jones Industrial
The
is not
NASDAQ
indicative of
went
what's
from
gonna happen in Jacksonville
98.17
Beach.
around the same time in mid-February to a low of 68. Closed at almost 12,000 yesterday. Crude oil is back up. There are several commodities that are back up to the pre-COVID.
Sergeant, the Dow Jones Industrial is not indicative of what would happen here in Jax Beach. That's one point I'd like to make. And second, I can also cite numerous articles that show the disconnection between what's happening in the market right now and what's happening on Main Street. Every day, if you go online, CNBC, whatever your choice of news outlets are, there's an article in there wondering, why is there such a disconnect between the stock market, which is rallying right now, and what's happening at the state and local levels? The point of this presentation was to try and outline the fact that there's a lot of unknowns.
There's always unknowns.
There's a great deal of uncertainty, yes, but I would argue that 2020 has proven to be a higher deal of uncertainty than in a normal year.
And in any year that I have seen.
Well, yeah, 2020's been a very unique year, and we haven't even hit the height of hurricane season
It's
yet.
been very, very difficult. And so imagine trying to put together a financial plan for a coming year when all the variables are wildly different from what the norm might be considered.
All right, thank you for answering that. We can go back, I guess, we'll jump in.
Sure. The next few slides just outline the general fund, give very broad level of where our money comes from. And the slide after that will indicate where the money goes. You know, public safety is pretty common for public safety to be a larger share of that pie. It's common across all governments, it's nothing that's unique to Jack Beach.
Why are you showing an increase in contract fire services for 2021?
There is a contract increase.
There is a contract in place, and it does call for an increase, our agreement with the county calls for that, so that's the second to last slide. And we show really just in contrast to what property tax revenue brings in compared to what it costs us to provide police and fire service. This is a visual that we provide to the council every year as well. Our increase with the county is either pegged to CPI or an annual percentage, subject to whichever is greater. Our agreement with the county for fire services.
How much was the savings to the city in 2020 compared to the budgeted amount?
That hasn't been determined yet, because I need to do it as part of the year-end trip, but I can have a number for you.
Ballpark. I'm not looking to nail
I'm
you
not
down.
gonna give a ballpark if I'm not certain of it.
Well over $1 million, wasn't it?
No.
Savings to the
Not in
city for.
2020.
Compared to the
Not in-
the budgeted fire for 2020.
The budgeted fire for 2020 was roughly. The budgeted fire for 2020 was $4.6 million. For 2021, it's 2.9.
Okay.
And so there is a savings going from 2020 to 2021. The issue is that when we formulated the budget for fire in 2020, what happened was we did not transition the fire services over to the county, I think, until November.
Okay.
And so we did incur leave payout costs as a result. We incurred 2 months of operating the fire department here at the city, and so that's not